Traders, and welcome to the Technical Analysis Market Wrap on Friday the 21st of May. So we've seen plenty of volatility this week. It's been a really good week for a lot of the majors and also the indices. Of course, with the cryptocurrencies running rampant earlier in the week, it's really made some volatility return to the market. So we'll jump straight in and see if we can find some opportunities for today and into next week. So I'll start out here with the Aussie USD. Trapped in the middle of the zone that we've been talking about for the last, seems forever. 77.70 is the mark at the moment, but when you go to the smaller time frames, you can still highlight all of the really good potential trades that were there. You can see here that it's been rising steadily, high low sequences all the way up, finding a little bit of support here on the moving averages, as you can see. This candle has tried to reverse. Look, for mine, we're still trading in between the zones, so there's no worries about that, but you've got to wait for a good enough opportunity now, okay? So realistically, the next target's 78 for it. It's only 30 pips away from where it is, and it still needs to make a higher high to actually get into this trade. So it really needs to get above 77.80, which we know is resistance anyway. So the trade up is actually the hard trade here. So I'm not really wanting this little bit of room because it's just not quite enough for the risk that you're putting on. Whereas the potential short from this end is not too bad. So you can see the 200 on the hour is pulling it up a little bit. You can wait for a series of lower highs and lower lows. You can see here we've already got that first part of the sequence. If we get a close below these moving averages, that'll give us that confirmation that the lightning bolt effect has happened, and then we can look at shorting it down to the 77. Failing that, if it does creep up and get up above to the 78 around this area here again, we're just looking for the same thing. We're looking for that reversal pattern on a smaller time frame and look to short it down either to the middle or down to the 77. So either one will work well. It's been working well for a long time now, as you can see, and there's no reason why it wouldn't stop. We're not looking at breaking these zones at all until it actually does it. When it does it, we'll be talking about a very different strategy, but for now, just trade off the 78 and off the 77 and maintain that zone. Now we'll move on over to the US dollar CAD. This is an interesting one because this one was promising some really good things and didn't deliver. It failed quite miserably last night, actually. We had what was looking like, this is a daily chart, and what was looking like a morning star pattern. But in order to trade a morning star pattern, you have to get price actually above the morning star on the next candle, which didn't happen. Now, we didn't get any of the reversals. We were looking for a smaller time frame, anything that was going to give us a signal that was going to go higher than this level here, and it failed to do so and actually gave back all of the gains of the previous candle, which effectively renders that pattern useless. Yeah, pretty disappointing for the CAD, really, because it would have been a pretty good pattern that would have led it into this area here. But as you can see, didn't eventuate, didn't even get in, so no harm, no foul, but definitely one that you've really got to wait for the confirmation. It's probably a really good example as to why we always wait for confirmation on these trades, because you can be sucked into thinking that it was going to actually do it before it actually, for all intents and purposes, looks really good on paper, but didn't actually get in. So go to the smaller time frames and it looks nothing but negative, as you can see. You know, it's hovering around this zone. It's doing a lot of nothing now. I think it's going to struggle to actually get past this level. I don't think it's going to have a great deal of difficulty getting lower than the 120 for now, I think, but we're just waiting for that reversal pattern. But most importantly, we need a series of higher highs and higher lows on a 1 hour or a 4 hour before we take it seriously. For me, with that pattern failing, I'd want to see 4 hour higher highs and higher lows. Like, you want to see a 4 hour series of higher highs and higher lows. If it does that, I'll be convinced that some momentum is picking up. MACD certainly in its favor, like, there's no question about that, but it's got a bit of work to do. So it really needs to get above the 121 sort of 50 area here to make that higher low sequence, and that will get it moving and hopefully get us up to around that sort of 123.20 to even 123 would be an acceptable level. Around this level here would be fine. So anywhere in this zone here would be a good one for this one. All right, we'll move over to the US dollar yen. This one has also been a little bit reluctant to move this week. It's certainly been up and down, but it's done a lot of nothing really. Ups and downs and all arounds, and basically finished where it was, pretty much where it's about started in the last 4 days. We've hovered in between these zones, as you can see, anywhere between the 108.70 and the 109 sort of 30. So really, as much as it looks like it's done a lot, it's only really moved about 50 or 60 pips. And it was difficult. It was actually quite difficult navigating even through the smaller time frames. You can see even here on the 1 hour, it's quite messy. The 15 minute wasn't too bad for the short. You could see the lower highs and lower lows, but you know, you would have been, would have to have been there for those trades. Obviously, you would have had to have been right in front of the market. So if you weren't there, the 1 hour did not give you much of an opportunity to do it. So it's one of those ones now where we're waiting for it to really do something. It's the last line of defense for the trend line. There's no question about that. There is a trend line there, but it's trying desperately to push down below it. If this daily candle closes below it, then that trend line is gone. As it stands, it's still valid because it is a higher high, higher low sequence. It hasn't made a lower high yet, a lower low either. So this candle is everything. If it closes below this trend line here and closes below the 20 moving average, we'll be looking for probably shorting opportunities from this point onwards. But until then, we'll wait for it to try and resurrect itself above this level. If it does that, then we'll be looking for longing opportunities into that 109.50 and 110 again. Not a bad trade still, but you just have to wait for it. This is one of those ones where you definitely have to wait for the confirmation. All right, dollar index. This has been a very interesting week for it as well. It's tried to do a lot of things and failed on all accounts. It had an evening star pattern at a point of resistance here on the daily. That one did work out. You can see we had the close and the confirmation earlier, and then it did actually run the distance of the pattern, which was good. Not ideal for the dollar-based pairs, and it's probably why we've seen the weakness in all of them, but realistically, it's finding itself at that very strong support zone again, around that sort of 89.80, 89.70 area. We've had three complete reversals of daily movement. You can see we had the negative, the positive, and now a negative again. It's one of those ones where we know it's at support. We're very reluctant to short it because we know it's at support, but we're also reluctant to long it until we actually get a signal that we're getting some sort of a price change. And as you can see here, we're certainly not getting that on the daily. In a perfect world, we will get a series of higher highs and higher lows on at least a 1 hour chart, and then maybe we'll look for some longing opportunities. If we get that, it's probably going to be a reasonable trade, at least up. I would be thinking that it's pretty easy trading on this one all the way up to about the 90.80. So, you know, around about 100 points on the dollar index up to this line here, which is not bad at all. Like, it could definitely get there. It's going to have to break through a 20 moving average on the way up now, but you know, it can do that if it gets up some momentum. It needs definitely a change of trend on a 1 hour at the very, very least. I wouldn't be looking for 15-minute changes of trend at this level. It needs to do it on a 1 hour, and then hopefully we will be able to launch off this area and start heading to the 90.80. All right, we'll move over to the EURUSD. Looks the complete opposite of that, of course. Still finding itself at resistance, and you can see the same pattern happening here. We've got a positive, a whole negative, offset by a positive again, but it still does find itself at very strong resistance. Okay, so just like the dollar index is at support, this one's at pretty strong resistance, but this one probably is the trade, because what you could do is look for the shorter opportunities down to the 20 moving average. I'd be pretty happy to actually short it down to the 20 moving average and then look for an opportunity long off that. It's still making a series of higher highs and higher lows, so for all intents and purposes, the momentum is still definitely up with this, and all you're looking for now is a pullback to the 20. Again, you don't want to be pushing down the barrier or entering at this level here, because this is right at resistance. Okay, so you either have to wait for it to break and then come back and retest it, or wait for a pullback to the 20 moving average, which is around this level here, and then try and long it from that point onwards. And if you do that, you're going to get a reasonable trade. Like if you long it here, there is a reasonable opportunity. That's 122 sort of 20 at the moment where it's sitting. If it comes back to the 20 moving average, that's way back to the 121 sort of 30 area, so a good 100 pips nearly pullback, which will be sufficient. That'll be a bit of a roll reversal zone, and the 20 moving average will hopefully catch it. That'll coincide with a movement up on the dollar index, and they should be able to reverse out. And that makes it a pretty easy trade back into this level here, because you've got the momentum on your side. So that's what we're looking for here, a bit of a reversal. If you want to trade it down to that, you've got to go to the smaller time frames, look for a change of trend. You know, we've got resistance right in front of us. So if we get a change of trend on a 15-minute or a 1 hour chart, and we see a series of lower highs and lower lows, that gives us our signal that we can look for a short down to the 20 moving average on the daily, which is around about 100 pips. So not a bad trade. All right, we'll move on over to spot crude now. This one has been, it's been a little bit funny. Look, it's obviously shown quite a bit of weakness this week, as you can see. It's pretty much fulfilling its price channel now. It's down to the 61, almost 61.30 area again, which we highlighted several weeks ago. So, we talked about this last week. We thought that the long opportunities were probably over, and luckily we did that, because obviously you can see that it has shortened ever since. I still haven't been even keen on the short because, like I said, the long opportunities were gone. But now, in times of volatility, this doesn't always behave itself as it should. But it does find itself at that price point now where potentially you could start looking at long opportunities. But it needs to do a change of trend and it needs to be on a serious time frame. I don't like it when something falls about $4 and then doesn't really show any signs of reversal. So what you want to be doing, where the support is, there's no question about that, at around that sort of 61.30 area. You go to a smaller time frame. I would be waiting for a 4-hour change of trend here. I definitely would. MACD looks really, really weak. I'm not convinced it's going to stop here. So we want to see price action pause around this level here and then show us a sign that it's starting to reverse again and look for that series of higher highs and higher lows on a meaningful time frame like the 4-hour. And then we could potentially look at longs back into that sort of 63 and again maybe into the 66 if it breaks that level. But one to watch here, I wouldn't be jumping in on this trade until it actually shows us what it's going to do price action wise to make sure that it is starting to halt at this level. Very, very important that you wait for this one because it could let you down quite badly. Even though this has been previous support, you really want to see that hold up at this level now. All right, the last one we'll have a look at is the all-important S&P 500. So this one here has been a bit of an up and down week, right through really. You can see we had quite a bit of weakness, big reversal here. We had a hammer candle off the 50 and then we've seen a big change of trend on the smaller time frames to give a really positive day. Now, for all intents and purposes, this is absolutely a morning star as well. And a morning star on a 50 moving average is pretty important. That's for sure. I would have liked it quite a bit lower. If this pattern here was actually down at this level here, I'd be a lot more happy. I'd be really, really happy actually because I'd be thinking that that's probably the sign that it's going to kick up and really push to new highs. It's a little bit shallow for mine. That's the only thing that worries me about it, that the pullback, although it looks aggressive, it wasn't really that aggressive. It only got back down to that sort of 40 area. It didn't even reach the 4,000 altogether. So yeah, for me, that's pretty shallow given that we've had so much strength. So look, the pattern is there. And if it does actually play out, it will go pretty much into the new recent high, which is around that sort of 42, 44 area. It'll play out that way. Still got a little bit of work to do, of course. This next candle price has to break above this level, so we've got to get basically above 41.92 to really confirm this pattern. It's got to get above the pattern itself to be valid. So you can't just trade it, but it's there, and it's definitely worth keeping an eye on. But for me, I would have liked to have seen pullback a little bit more. It would have made a little bit more sense from a technical standpoint as well, given that the pullback would have been reasonable. So watch this one with care. I think you've got to do that. Like the 20 moving average might hold it up now too. Like you can see the 20 moving average on the daily. It may hold up price going any higher. Interesting to watch it throughout the day and early into New York tonight if you are going to trade that session. See what it does. Look, if it does break to a new high on this daily candle, you can look at taking longs back into the previous resistance here around that 42, 44, like I said. But if it does start to break down and look short again, which is probably the preferred trade, even though this is a good pattern, we want it down here to get good solid longs, okay? This is the level where we want to take it long from, ideally. So we go to a smaller time frame, and if we start seeing a series of lower highs and lower lows right around this level, that's when we start aiming for that 20 moving average, on the 50 moving average, sorry, which is around that sort of 40, 80 area again. All small scalps on this one, no long-term positions yet. We want to be looking for scalping opportunities on this one still until we get a clear direction, either a break above this level here or a break below this level here. Because ideally, this is where we want it. The 39.50 is providing the best long opportunities at this stage, but it's got a bit of work to do to get there. So, look, we've had a really good week's trading. I hope you've been able to take advantage of some of these great moves because some have been strong and sustained. We will see what happens tonight, but I think the trend should continue into early next week. So I think we're going to get some good trading again next week. I don't think the May madness is over yet. I think we should get some good opportunities and just basically look at the zones that we've talked about today and set your alerts. So if they get broken or are tested, you're able to get in. Thanks, everyone, and have a great weekend.